G'day, mate. How are ya? How's your mum? Let me get some of this stuff out of the way. Close window, close window, close window. All right, good morning. Welcome to Forex.Today YouTube channel, the community of 14,000 foreign exchange traders that love to trade euro, love to trade dollar, love to trade yen, love to trade pound. Just love to trade and trade for love. Let me remind you that trading, however, is risky, not appropriate for everyone. Your best performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao ma. I got my Forex.Today colors on. Good to see you, everybody. Please like, please subscribe, please comment to this video. If you're watching a recording, make sure you leave a comment. Simply tells YouTube this is quality content. And I aim to please, and please may I aim. So today we'll cover technical analysis, maybe some fundamental analysis, all that kind of stuff. I'll answer your questions. And we'll call it a day. Oh, Jim, yeah. Jim, I think you sent me an idea where I should have my son create a store, and maybe you're right. Maybe you're right. But anyways, yeah, I don't have it today. I only have. Here's my cup. Cool. So yeah, ask questions, get involved, and treat your fellow Forex traders in the chat with dignity and respect. And then also, thank tradersway.com for being our sponsor. And you do that by visiting tradersway.com. On the right-hand side, you'll see a button to open a form. You fill out the form, honestly, 12 seconds. Boom, you're in the back office. You can download MT4. You can download MT5. You can also download CTrader if you want. Play some execution trades, and you'll see the speed is fast. The swaps are good. Spreads are competitive. The thing is, they don't monkey around with your money, and that's what you want. Tradersway.com. Thank you, Tradersway. If I had $1 million, I'd make 5 million more. But I wouldn't buy a green dress, that's cruel. All right, so I was watching ZAR yesterday in a range, and seems like we're breaking that range. Very interesting, and that's a risk-off play. What's up, Bradley? Ba-ba-ba-ba-ba-da-ba-boom. Okay, so we got ourselves a little range, but the thing is, what we're looking at is maybe up to the next range, and that's risk off. Hua? All right, so let's look at yen. No, I know. Oh, really? Sorry if I insulted you. How dare you call me Bradley? Oh, no, he didn't, did he? I think he did call you Bradley. FD9 doesn't understand risk on, risk off. You need to take the training courses. Go to fxbootcamp.com. Yeah. Full names. So this one's not working out well either. I bought a little dip off there and whatever. I can tell you one thing, Brad. At Harvard, I think it's in Kirkland House. They break it out into halls, and one of the halls is named Hall, so it's Hall Halls, named after the Hall family. So maybe you're part of the Hall heritage and legacy at Harvard. Could be, right? All right. If I had $1 billion. Yeah. Hall. Hall in the hall. Hall and ass. All right. So there we are. Probably time to get, but we'll see. Yeah, no one's trading. Oh, faux show. And like one thing you should look at here is down. Well, they're not. This one's daily. Let's put them all on what, 4 hours? Let's put this on the 4Z, 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 and 4Z. Okay. And you can see on a 4 hour, there is some up. It's not good up, but there's some bid. There is some bid. So this one I'm losing money. This one I'm break even. This one I'm making money. So a lot of zero, like a lot of nothing. But don't worry, I didn't put a lot of effort in it either. Percy says, what's causing these pairs to be so slow? Go back and watch all the videos I did before it got slow, back when the markets were moving hot and fast. Let's say end of May and the beginning of June. And I explain why everything's going to change, and I explain the exact day it's going to happen. So go back, watch all those videos. Okay. Literally told you the exact day that this would happen. Cool. So anyway, so look, didn't put a lot of effort in, and whatever. So I'll throw down some manual stops here. Guess I could make that the bigger one. I guess I could have these a little closer. Oh, that one's fine. That one's okay. They're all fine. But notice the congruency here. Up on the 4, up on the 4, up on the 4, up on the 4. Remember, it's not telling you it's up. It's telling you it has been up over that time period. So that's that. Yes, I own a server. June 12th. Okay, so anyways, nothing. Just farting around. So 2 out of 3 are profitable, but average it all out, break even. Nothing. So anyways, there you go. There's the yen pairs. Yeah, guys, if you, here's what I normally do. Here's what I normally do at this period, guys. I say my 35 to 50 hours of training videos are on super sale. We call it summer school. And typically I go away to Harvard, but Harvard's closed because of COVID. I mean, classes are open, but not on campus. Everything's online on Zoom this year. So typically I go away to Harvard and I say, look, I spend time and money on my education. And this is an excellent time to do it because the markets are slow and not really worthy of your time. So instead you should focus your time and money on your education, just like I am. And then I say, to help, I do a super sale, and all the training courses are what? 50% off or 60% off. Sometimes it's 618% off. This year, right now, those are 76.4% off. Almost 80% off. So there's already summer school. So if you're sitting here day after day going, man, there's nothing really going on, you need to buy the training courses. And then from that, you get invited into the live groups. But I kind of smirk when I hear people are like, oh man, I watched everything on Netflix. I'm so bored. COVID's driving me nuts. We need more content on YouTube. You're like, really? That's what you've been doing with your time? Like, why don't you get a degree? Why don't you get a PhD? You got the time. Watching Netflix 5, 6, 7, 8 hours a day for weeks on end is just really, I can't understand people like that. It's truly amazing. I'm like, wow, and do you feel good? And they're like, no, I feel lethargic. Yeah. So right now, guys, if you're like, these markets are really slow, but you're like, I don't get the concept of risk on, risk off. Well, then stop trading. Like, full stop. Stop what you're doing. Why would you invest your money into something you have no idea what the basic fundamentals are, right? Like, wow. Stop everything. Spend $400 and get some courses. You can binge watch FX Bootcamp. It's probably 50 hours, so it'll take you a while to binge watch it 2 or 3 times. Okay? And then, of course, in the live groups and stuff, you'll get a lot of help and support. But, like, why waste your time sitting here for 5 hours trying to make 15 pips each? You understand I've been in these trades now for almost 24 hours, and I'm up like 12 pips? Right? Amazing, right? So, I know, shameless plug, but what else do you want? You're here for me to help, and I'm telling you, that would be very helpful. Okay, and I do it every year, except this year's already better because of the COVID special I put out there. So yeah, just like, it's stupid good. It's retarded good. One Harvard class, I spend more. Look, check it out. This book costs more than all the video courses. This is one book, but this class also has this book. And this book costs more than the video training course. Same class. Same class. Oh, and by the way, you also have to buy this book. Same class. Right? Look at that. I could pay for FX Bootcamp twice and still have money left over. And that doesn't even pay for the class. And on top of that, I have to take another class. Like, it's so little amount of money for what you get. It's absolutely disgustingly silly. It's silly. So whatever, like, there's whatever. Right? Right? Yeah. It's funny. So get on it, man, because I got some really cool stuff coming. Okay? And I'm not going to just teach you how to trade profitably. That's the easiest part of being a trader. That's the dumbest, easiest part. So anyways, I'm going to get rid of this. I'm going to give you a career. I can't even tell you what we're going to do because your mind is not ready for it. All right. Yes. Yes, FT9. Absolutely. It starts with taking control. Yes. So it starts at the very basics, very beginning. Then you learn technical analysis. You'll learn fundamental analysis and central banking policies and day trading and swing trading, position trading. Yeah, just there's tons. All right. All right. So anyways, I'm just identifying support and resistance, finding out where we are, trying to figure out where we're going. So I want this up, of course. Is the book like the video courses? Well, I wrote the book 12 years ago or something. Is it like it? Well, there's one course. Actually, there's one of the videos called Strategic and Tactical Forex Trading. It's a 2-hour video that covers the content of the book. But there's so much more. There's so much more. I mean, look, there's 50 hours of videos, right? So, yeah, anyways. Yeah, Vito says, just follow his tips, buy M2, all right, sell M3. But you have to, and then make sure you're doing, if you're buying M2, you're a bull. If you're selling M3, you're a bear. Yeah, that's all you need. Quick question, what's a good monthly ROI? Well, Bradley, the best commodity trading advisors in the United States that focus on global macro, which would include Forex traders, the best professionals managing over $100 million, average, the best, produce 2% a month. Okay? 3% a month, you're going to have 50% returns at the end of the year because of compounding. And 6% a month, you'll double your account at the end of the year because of compounding. Sure Trade says videos are way better. I don't know if they're better, they're just more detailed, right? So maybe that's better. Anyways, I guess I should do it this way. So whatever. What does it cover? Look at it. All right. So that's that. So I have to discern how long this is going to last. I'd love for the up and supportive action. And then I'm going to carry it on somewhere else. So right now I was looking at the income produced by USD South African Rand. Okay. I know this is a USD CAD, but I'm looking at this. This shows risk off. Okay. Okay. Well, how about this? I was thinking about this train of thought. Maybe this would be helpful. How many people know what an activist investor is? I wouldn't call Bill Gates an activist investor, but what does an activist investor do? Thing is with Bill Gates, I just don't like him, so I probably roll my eyes no matter what you say about him. I don't know who, and I don't care about who, what. Right? School is funny. When you're in school, The professor will tell you over and over and over, just answer the damn question. Don't make up a new question, right? Who was not the question. What? No, there isn't, Peter. Shareholders at public, well, it doesn't have to be publicly traded companies who attempt to effect changes in the organization. So that is a great answer, Pat. And in this case, an active investor is an opinionated investor. They have an opinion on how the company should be run. And in fact, they bought into the company because they believe that the basic product and service of the company is good, but the leadership is not producing the full value. So if they can come in, make some changes, they can create value through their opinion on how the company should be run. What's a passive investor? Someone who just buys the stock. They don't vote, they don't sit on the board, they don't even really have an opinion. You're like, I don't really care what Apple does. I'm buying Apple stock. Okay? I mean, I wonder how many people that own Apple stock place a vote. But anyways. So you kind of have to choose with your trading in the Forex market. Are you going to be a passive? You don't really care what's going on or why it's going on. You're just sort of trading. Or are you going to be an activist? And by an activist, you're opinionated. You are going to sell the British pound because you think the great British people are screwing it up. Brexit was a big mistake. The acts of the government get in the way of the central bank, and the whole thing is FUBAR, effed up beyond all recognition. So whatever, and you think it's being mismanaged, and therefore you are going to sell the pound. Imagine like that's an opinion, right? You're an activist. You are going to punish. Or the opposite, or I guess equal but opposite. You can sell exotics. Now, you wouldn't want to hold it long term, but you could sell every day, sell exotics because you believe they're overridden in foreign currency debt. Whatever. So you day trade the South African rand down, right? So you can go here. And that could be your point of view. Or your point of view, again, equal and opposite, you believe global macroeconomics are going to improve and you want to buy South African rand. And you look at it and you're like, not today, I'm not going to buy that. Because by buying, I mean selling, right? Because to buy the rand, you have to sell the dollar. Or you're like, right? So you have an opinion behind what you do. And that's really what I've been asking you to do. Now, you can be sort of a passive investor and just say, I don't know what's going on in general, but I'm going to throw down trades. That's your call. But I was wondering if maybe that train of thought would be helpful. Okay. You're an activist investor. You're an opinionated investor. You don't like the British pound because of Brexit. Bradley, I love doing the work, so I'm not really looking for an EA. It's like one of these things, like, why would I not want to be in front of my charts? I'm the kind of guy where if I'm not at home, I miss my charts. So to find a way to not be in front of my chart sounds terrible to me. Yeah, that's a good one, Brad. Yeah, so like for example, let's go back to the exotic one since we're talking about peso. I didn't want to do that. Okay. So like, right, we're down to rand and peso really. Um, so I'm an activist investor, let's say, and I love South Africa. I love it. The country is beautiful and filled with natural resources. The people are awesome. The culture is strong. The food is good. The wine is good. And it's good to be president. If you ever want to be president of the country, of any country, you should seriously consider South Africa. It's got some good perks. So, I love everything about it. So now I have to decide whether I want to sell this today or sell this tomorrow. So, one benefit, right? So, by the way, as an activist investor that's pro South African Rand, I believe in the near future, for the long term, South African Rand will appreciate. Bradley loves Polish zloty? Really? You're all over the zloty? I love the zloty too. But I'm still going with Rand. So one benefit, if I get this right and I can buy little positions over time of South African Rand and hold them. What is my annual percentage return? Here, it's actually said this way. I have to restate it. As far as income, what is the internal rate of return for Rand? Okay. So that's a percentage just based on interest only. What is interest? What's the internal rate of return for interest payments on the South African Rand? So the difference between, I guess, nominal return and internal return, so we have to do return. Internal return. Okay, a nominal return is how much money did you make total, okay, with your Forex trading at the end of the year. So you'll say, I returned $10,000, and then to make that a percentage, $10,000 on a $30,000 account, so now you made a 30% return, right? Kind of thing. And then internal rate of return is the return for every dollar you put to work. Okay? And not including the money you didn't use. So this is why a real estate fund does internal rate of return. A venture capital fund does an internal rate of return, and you'll do a nominal on your absolute return fund. Okay? But in this case, I'm saying for every dollar I invest into the good country and the good people of South Africa, what is my internal rate of return? So now I can think of, like, I don't know how much money I'll have invested in South Africa over the next 12 months, but I know my internal rate of return per dollar. And then now I can build it up. And the IRR is not likely to change, or it won't change much. It'll only change with interest rates set by the government. Okay? So, my internal rate of return per dollar, so for every dollar invested, over the course of 12 months, I will earn 100%. So, it's like holding a bond that pays you 100% a year. Now, that's only because I'm investing leveraged. But I'm investing leveraged. There you go. Okay? So here's the thing. For every 100,000 So for every standard lot, I think it's like $3.33 a day. Okay? Times 365, and you can see it's actually more than 100%, but you get the idea. The problem is you're earning 333 cents a day, but in 1 minute or in 1 second you can lose $30. 1 per second. And then it goes up 2 more pips, right? So it's $10 a pip, and then it drops down to this, and then it goes to 8, right? And then it goes down to this, and then it goes down to this, and then it goes up to this. So it's crazy, right? So it's not a lot per trade, okay? Right? You're going to make way more on the pips, of course. But one of the ideas you can have is you can still collect 100% per year. So now your job is, if you can tiptoe into this trade, okay, if you can tiptoe this trade, one small trade at a time, but maybe over the course of 12 months, you can get this loaded up. For every dollar you put in, you're going to get $1 out. Johnny says you can't trade 365 days because the market is only open 5 days a rain. Well, you're actually earning income. So unlike the stock market or the bond market, okay, Johnny, you get paid interest 7 days a week. So let me show you one way to check this out. So you go here, and so what are we looking at? USD Rand. Okay. So there's ZAR. Where did it go? Where's my Rand? Where'd it go? I must be staring right at it. Oh, here it is. Okay, I'm gonna move that. Come on, Bubba. All right. All right. So check this out. 3-day swap. Okay. So there's something in Forex called T+2. And this is how long it takes to clear an actual trade. This is how long the interbanking system actually needs. So when you close a trade, you get paid and whatever. In reality, the interbanking system has to clear these trades. Okay? And probably the Bureau of International Settlement has something to do with this. But you have today. So you close a trade today or you open a trade today. There's today plus 2 days. Okay? To actually clear or execute and clear your trades behind the scenes. Okay? So, trades opened on Friday, for example, when do you get paid and all this kind of stuff? There's an interesting phenomenon. According to this 3-day swap, on Wednesday, you get paid for Saturday and Sunday interest payment. Because it's calculating the 2 days. Okay? So you get Saturday, Sunday, and really Friday. That's why it's 3 days. Okay? So it must be T+3, thinking about it. Okay? T+2, I think, is stock. So it's T+3, or it's T+2 including the day. Okay. So I'm going to put it back. I might be wrong on T+2, might be T+3, but let's just, okay. So anyways, what it does is something really, it's a great glitch in the matrix. So on Wednesday, let's say at 4:59, okay, New York time. You sell. You sell the USD Rand. And at 5:01, you exit. Okay? You've held the trade less than 2 minutes. You will get paid $3.33 for Friday. You'll get paid $3.33 for Saturday. And you'll get paid $3.33 for Sunday. Yeah, so it must be 2 plus 3, right? Even though you've only held the trade less than 2 minutes, all of this is calculated on the books and paid at rollover. So if you hold a trade in Forex, you get paid 365 days a year. Okay? So you will get paid 365 days a year in interest. You will get paid a full year's worth of interest payments. Okay? Now the interesting thing is, if you could trade this every Wednesday and own it 100 minutes a year and get paid for 6 months worth of interest. This is a percentage, right? So you're gonna get paid on every size. Okay. So, for example, like I said, if the internal rate of return for this pair on interest only is 100% a year, assuming you're leveraged 100 to 1, then it's 100% of $1. So if you held this for 1 year, you will be paid $1. If you've put $1 in, you'll get $1 out. If you put $10 in, you'll earn $10 in interest per year. If you put $1 million into this, okay, at the end of the year, interest only, you will earn $1 million in interest. Okay, you see what I mean? Your internal rate of return on interest, your income, not the appreciation or depreciation, just the swap. Every $1 in, you'll get $1 out. Okay, so for example, at 100 to 1, to sell this, you need approximately $1,000 in your account. Okay, you got me? But because you're leveraged 100 to 1, that gives you $100,000, right? You understanding? You only deployed $1,000, but you control $100,000. That's why I'm using internal rate of return. I'm doing the calculation on your actual capital deployed. I'm not calculating it on the $100,000. You used $1,000 as collateral to borrow $100,000. So at the end of the year, if you added up your $3.33 times 365, which I guess we could do. I'm going to turn my drawing tool off. Okay, so now we know you've invested approximately $1,000 of your capital, okay, to control a $100,000 position in South African Rand. Okay, cool. So you get paid $3.33 a day times 365 days, because you will be paid every single day. Okay? So you're actually earning 121, let's just say 120% a year. Okay? So you're actually earning 120% a year. Okay? That's why I did it. So your internal rate of return for that is 120%. Now, like a bond, your asset can go up and down in value, and that's where your risk management is going to have to be supreme, because you could have one bad day and wipe out 6 months worth of interest payments, right? So really, you're much more worried about asset appreciation and depreciation than interest. But that's nice to have a bond that doubles your money every year, right? But if you only have $1,000 invested, then you're only going to get 1,200 back in interest. I mean, it's not going to. So if that's only 2% of your account, then you'll make 120% on 2% of your account, and it'll be meaningless. So you really have to build a position. Okay. Pat says the swap confuses me. What confuses you? It's an interest rate payment. So I'll define it. A swap is how much interest you are earning or paying for your loan. I don't care about consumer confidence. It's dumb. There you go, Kev. Yeah, but who's paying it? Pat, who's paying it? Where is it coming from? You think Traders Way loves you so much they're going to give you money for free? Hey, look, I'm going to give you $3 back every day. We feel bad for you. No, of course not, right? Yeah, Kevin, I know it sounds facetious, but it's totally irrelevant. Who the hell would care? It doesn't make any difference to the economy. Now you're like, well, maybe they'll go out and buy something. But we already know that, so who cares? It's a survey, okay? All right, so who pays it? Well, how would you like to lend $1,000 to the South African government? So maybe I didn't phrase it while I was waiting for an answer, but so you're loaning South Africa money and they were paying you interest. That's it. That's what it is. You are taking US dollars and you're loaning it to South Africa. And South Africa will pay you money. See? No, it's all right. And I'm not saying I said it right either, so I'm just moving on. But that's what you're doing, is you have decided to loan money to South Africa. Now, the interesting thing is you loaned them 100,000 US dollars. Okay? And you only ponied up 1,000 of your cash. That's why the rate of return is so high. So now, swap does not confuse you. Welcome. All right, so Kevin has a conspiracy theory. So why don't you be more clear on the conspiracy theory, Kevin, and we can address that so you're not so concerned. Oh. No, I probably said it poorly, Anthony. Oh. And I've been out in the yard with a chainsaw the last couple of weeks, and it's starting to take its toll. I think I've taken down about 6 trees that must have been 100 feet each so far on my property. So Kevin's, I'm trying to figure out what he's saying. No, Trader's Way is going to take that lick on all your long-term trades. You're saying they're taking part of the swap, which actually might be true. I don't know. Only profitable for day traders, and this guy teaches you. All right, so I guess what you're saying is you want me to do more short-term trades? Spit it out, Kevin. What will make you happy, Kev? How can I help? La 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 la. Boop, 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 boop. I guess he's typing. All right, so we'll move on to something else. Let's do the dollar pairs now. Yeah, if it's not too much trouble, would you guys click the thumbs up button, please? It simply tells YouTube this is quality content. That would be helpful. Been appreciated. Thank you, everybody. Wing Chun. I don't know what Wing Chun is. All right, so we got a nice move here. This is what I'm looking for, is nice dollar weakness. So we got to track this. Oh, Tai Chi, yeah. So I want to see if there's congruency here. I got to get these on reasonable time frames. I'm going to put them all in hours. Wow, I specifically was going to help Kevin, and I guess after insulting, he's left. All right. Okay. So yeah. So I'm looking for. I want to see U.S. dollar weakness is what I'm looking for. So I see a little bit of weakness going on in the moment on USD CAD. See a little bit in the moment on Aussie. Let's see a little bit on Kiwi. Okay. And the interesting thing is, yeah, so this is good. So there's a little here, and there's a little risk on across the board, even oil. Okay. Yeah, okay, so sometimes when there's background noise, if I bring the mic closer, it's helpful. Is that better? So you can see if you're a bull, and if I'm risk on, I'd be bullish on this. You can see that's a buying pivot, and this is the next one after the high, right? So that would be good. That'd be good if it continued. That'd be great. Oh, right on, Sav. I'm not sure what it would be picking up. Other than that, it's pretty quiet in my office. I mean, I soundproof my office. Okay. So that's pretty good. And then when you see the congruency on well, look at this. It's already come back. What is it? 10 o'clock news. Yeah, news is coming up, I guess. Huh? So anyways, maybe it's brief. But I'm watching this being independent of that. So caught in the zone, so could just be profit taking. Let's take a look on a higher time frame. Yeah, just going nowhere fast. I mean, well, I can't say it's going nowhere fast. I mean, let's change this point and go to price action pivots. Okay. I mean, it's going somewhere, right? So the thing is whether you're selling these little rallies or not, really is what it comes down to. You are not alone. Okay. You got to be careful. There's a couple of things to be careful of. I mean, this is mediocrity. In general. What a great trade, though, huh? So on Monday, you had this very, 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 very bullish trade. And based on buying there, your exit is here. And because it hit early in the week, you got the counter trend. Which is actually, I should define it. Oops. I should define the counter trend really being here, right? Pretty amazing that it worked straight up like that last week, huh? Look at that, just amazing. And then this week we open again at M2, but after 100% retracement, we're lacking trend, right? Because if it was bullish, you'd have a 382 Fibonacci, you'd have a 50% Fibonacci, you might have a 618, but you don't have 100%. Well, so Zeb is asking about pound dollar, euro dollar, and stuff, but I'm analyzing US dollar here on all these pairs. That's all I've actually, that's primarily what I've done today. So right? So if I'm analyzing this, you should already know the pound. Okay. So, you know, it's just slow and steady, right? So I'm kind of waiting for the trend. It's fading down, right? So you can do a different sort of study here. It's down and up at the same time. Okay. I'll give you a signal right now. You should probably not be trading. Let me update you. There's no trade. Okay. Ba 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 boo boo boo. Do 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 do. Yeah, everything just says wait, 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 wait. Okay. So, I mean, what does it actually say? I told you way back in, let's say, March, that you should stop expecting market conditions to be the same in the June Fed meeting. That's supposed to be, okay, in the June Fed meeting, right? How many people know that for a fact? I know you've answered this 1,000 times, but it's still, I'm trying to appeal to a different part of your brain. How many people would agree that in March, I said at the June Fed meeting, stop what you've been doing, everything's going to change. Change your entire expectations. I've actually done this thing where you're like, you take off your hat and you put a new hat on. You actually become a new type of trader. You have completely different expectations and outlook. Okay? So that day, by the way, was right here, June 10th. You're welcome. So that's what I see now. So in some of these other trades, you might want to, right? And I said there would be a period of profit taking, and then we would lose volume and volatility. And that's kind of what's going on. So you still have to decide whether you want to be up here or down there. Like, you still have to decide whether you're a seller of rallies or buyers of dips. But really, I think if you saw this coming before everybody else, you would have had an advantage. No, it's not going to come back as much in September as it normally would. Okay. Yeah, that's a good point. We've already hit targets for the month. So like, for example, I prepared everybody here today that June would open hot and fast, hit our target early, and we'd be done between the Wednesdays around the 10th. So like, this is done. We already did this. You already made your money and we're already done. So like, this is just farting around, picking up crumbs, you know. Yeah, the giant sucking sound of summer. But you can make money, but what I'm suggesting is let this happen a little bit. Let this happen. It's not going to remain as tight as it is, but nor should you be the one that breaks the range, right? So really discern, are you a bull or a bear? And look for your opportunities. You're going to have opportunities, and then you're going to look for big opportunities, but you're going to expect small returns. That is correct, Brad. So in our group on Thursday, we're going to pull July apart and set it all up, right? But for example, if you're a long-term bear on this pair, you're long-term risk on. So is July going to be risk on? I don't know. But I can tell you, okay, that you could be selling or looking to sell off this line for this week and maybe the entire month of July. So you take the shot when you can. It doesn't look quite ready on this time frame, but maybe on smaller time frames it does. Or you're identifying when you do want to enter the trade, okay? And you slowly want to take this down, but at the same time, I mean, that's a big trade because you're setting it up for a month, okay? But at the same time, you plan big. So you're going to go from July sell zone to July target, right? But I think you're going to, you know, you're going to plan big, but you're going to think small or expect small or anticipate small, where maybe you sell up there and all we do is hit the support for July. So that trade plan would be something like you're going to sell this around here and you're only going to target 134. That's the entire month of July. And then I look left and I'm like, oh yeah, that totally makes sense. So it's still a big trade as far as planning it properly, but you're tightening your expectations. And I'm not looking at this green spot. That's irrelevant to me. Okay? I'm looking at July support pivot. Okay? So you're on the weekly M3 inside the July M3 C central pivot zone. So you got this week inside of next month, and typically you would head down to M1, but in this week I'm thinking small or expecting small. So I'll go to the first level of support, and then I take this across and see that a double bottom. So I'd be selling this week at 37, and I'd be targeting 34. And I wouldn't expect to make more than 300 pips in the month of July on this trade, which is pretty disappointing. Those are monthly pivots. Okay. Okay. Yeah, so Brinsley's like front running it. Yeah, you got it. So now you have your conundrum. Well, how do you deal with this? You're on top of that, so you don't really want to sell yet. So that's where you have to make decisions of, down, up, down, and then out. And so that's less than you expect. And there's going to be a lot of challenges along the way. But, it's like cooking barbecue, man. It's just slow and low. It's going to take some time. The cool thing is while you're waiting, you drink a lot of beer. No, it's the real same one. You probably have MT5, Michael, and it just prints a little different, but it's the same ones. Yeah, coffee. Which I'm actually due for a new one. Let's see. So there's this. So that's this. This is the confluence. Okay, but you can, of course, you can adjust the indicators, right? You can adjust them any way you want. I think these are right off MetaTraders. What else would you be looking at? Yeah, they should be the same as mine. I actually like the MT5 version even better. Yeah. So I'm not sure which one you don't like. So the gray ones are monthly and the other ones are weekly, and you can change them. But I have a blank MT5. I have an MT5 somewhere. Let me fire up MT5. If I had $1 billion, I'd make 5 billion more. If I had $1 billion. Right, come on, MT5. There it is. All right. Okay, so if we go here, oh, Loading. Okay. All right. So, so let's see. Templates. Oh, this one's a little messed up. The general one should be here. So I like confluence, right? So let's look at it. Yeah, see, these are pretty. I actually like these better. Okay, so this is MT5. Live, no, I don't want it. Okay. So yeah, so I like this one better, really, if I were me. I don't really trade MT5, so that's good. So anyway, so now I got to decide what I want to do and how I want to play it. The cool thing is, I already know I want this to go down. In a blaze of glory, take me out. Okay. So I just have to now do my time. Wait for the time. And probably somewhere near this price. So maybe if it drops down to 36 and then rallies up to 36.50, I'd drop it like it's hot. Okay. Okay. Pretty simple. But right now I'm like, all right, so we're one standard deviation from the mean. Y equals mx plus b is sloped down, right? So you're like, yeah, okay, if you were a bull, maybe you buy it down there. It's not really a good trade, but it's a trade, right? So you're like, yeah, all right. And off you go. You're like, yeah. Or you can wait for things to get better. Michael, Forex has to do with money. So the amount of people dying is irrelevant to Forex. If the states shut down their economy, that affects money. Or if people change their behavior. So let's say California doesn't shut down, but people are afraid to go to restaurants. So they stop going to restaurants. All right, okay, it's the same thing. So, right, it comes down to an effective shutdown one way or the other. Okay? So when the governor of Texas or the governor of Florida says, well, people are getting sick because they're going to restaurants and bars. Young people, I think one guy said, they're going to restaurants and bars. I'm like, yeah, well, that's what young people do. So as long as they do that, getting sick is irrelevant. As long as they're going to bars and restaurants and they want to meet pretty people, okay, then that's great. Then that's good. That's good for the economy. Now, they might get sick. It's all right. Young people don't die. Now you're going to get all on me on the stats and stuff. Okay, whoa. All I'm saying is it doesn't matter if you get sick. If you're going to the bar and spending money, you're spending the money, and that's what matters. And then really, ultimately for us, it also matters whether they're buying stuff from other countries. So you go to a bar and you buy some beer, that doesn't affect the dollar. Okay? That doesn't affect the dollar. But it's good for the economy, and maybe the economy then leads to other things, right? So if you buy stuff on Amazon.com or from Walmart, okay, then yeah, that's going to be great for the economy, and that'll weaken the U.S. dollar, which is a fantastic thing. Okay. So Michael says, what about government cash injections and consumer spending? It has to cross a border for it to really matter. If you're talking about Forex, it has to cross a border. Okay? So there's two ways of government injection, right? There's the Fed, and the government. Okay, cool. Where does the Fed send money? Who gets Fed money? Do you get Fed money? Who gets it? Banks. The Fed is the bank for banks. No, it goes to the bank. Fed is completely independent of the government. Cool. Now the government gives money. Where does it go? Okay. Okay. Well, it can go to you slash the real economy. This goes to the financial system. Okay. So I received money from the government. Cool. What do I do with it? Went on vacation. Cool. So I spent it. And that entered the real economy. But they could also do shovel-ready projects, like building bridges and roads and stuff. But they never actually do it. But if they did, it would pay for people's salaries and all that kind of stuff. And at the end of the day, the money, right, the workers that get paid at lunchtime, they go to Carl's Jr. for their 3,000 calorie lunches, and that money goes to Carl's Jr. and then that pays for their employees and so on and so forth. Okay? So that enters the real economy directly. So this gets turned into loans, and loans get converted into spending. So this takes a while because you got to go to bank to bank to bank to bank to bank to bank to bank, and eventually gets converted to loans. This may be more I, and this may be more C. You could look at it maybe that way. No, the Federal Reserve has shareholders. Okay. Okay. So, in the overall economy, so that's what everyone is worried about. The Fed and the government are trying to impact C plus I plus G, right? Plus X minus M. And that fancy formula, we give it because it's hard to say that, like, hey man, did you see the C plus I plus G plus X minus M numbers lately? Holy smokes. So we like to dumb that down even further, and we just call it GDP, the productivity of the economy. So this, I mean, this isn't actually true, but let's just dumb it down and say it's C plus I. Eventually, this gets down into how do you spend this money? Okay. Does a local company buy some Huawei devices, networking devices, right? Do you go to Walmart or Amazon and buy things from another country? Do you buy an LG TV, or do you buy what's the old American TVs? Zenith? Do you buy a Zenith? Do you buy a Westinghouse, or do you buy a LG or Samsung? Like, what kind of TV hangs on your wall? So if you spend this and that crosses a border, then okay, or if a business spends their money and they buy products from a foreign country, what happens? U.S. dollar falls because we're converting U.S. dollars into the interbanking system, increasing the supply of dollars globally in trade of LG TVs or Samsung TVs. Okay? Okay? You see what I mean? So somebody's like, well, what about this free money and stuff? Well, what about it? When will it cross a border? Okay. So I want to see US dollar weakness because it means all that money that was pumped into the market either by the government or by the Fed eventually has turned into spending of some sort. Businesses invest, consumers spend. Okay? And that means things are good. If you're spending, you're not worried about losing your job. You're not worried about paying your rent. Same thing with businesses. If they start spending their hordes of cash, great. Okay? And when the government gives businesses free money, that keeps people on the payroll, and therefore they're not worried about losing their job, therefore they spend money. Or the government just gives you money in your bank, and you're like, oh, look at this, some money showed up. So you can spend it. You can save it, of course. That's bad. The government doesn't want you to save it. You can pay down your credit cards, but that's bad too because you already spent that money, so that doesn't help. But if you go out and you're like, man, I got this free money from the government. I'm going to buy a big TV. Cool. Then that will, right? Exports minus imports. Okay. So that means if you're importing TVs to put on your wall with your American money, the dollar will weaken. Cool. But why? Because things are good. So I want the dollar to weaken because that tells me things are good for people. I want people to be happy. I want people to be safe. I want people to buy their loved ones nice things. Okay? And if I get what I want, then we're going to see stuff like this. Okay? If we drop down here, I say, ooh, things are bad. So I have to ask myself, I want things to be good, so I'm trying to look at this as support, and I'd love to see this triple bottom, higher high, higher low, and if it does that, I'd like to buy it here. Might have to wait a couple days for that. That's cool, dude. Okay, you see where I'm getting at, guys? What's up, Danny? Oh, Danny man. Danny boy grew up. Cool. So I guess I'm going to go. I'm tired. I was up at 3 o'clock in the morning. Yeah, you too, Danny. Right. Of course, the RB&Z would not want a strong Kiwi. They're an exporter. Right on, guys. Well, would you please leave a like? Only about half of you have clicked the like button. I've given you about an hour and a half today. So I hope everything goes well. Still farting around at break even. Very nice. But at least I'm risk on, you can see. I want the world to be a happy, rich place. Free of socialist pig dogs and their nonsense. Yeah, have fun with those textbooks. Yeah, actually, I have 8 hours of classes today. 8 hours of lectures. Of course, I have homework to do. I have hundreds of pages of homeworks to do. But, yeah, but I have 8 hours of classes today. So the question is, are you putting that kind of time into your education, some time and some money? I highly recommend you use this period of low volume and volatility. Since you're looking at this, you're like, man, nothing's happened all week. Well, then you're wasting your time, and therefore that's an opportunity cost. You could actually be doing something. So maybe you consider putting $382 into some training courses and spend hours and hours and hours. Spend 8 hours today in training courses, because you know what? Honestly, this is what I'm doing. Right? I didn't show up to Harvard and say, Harvard, will you educate me? And they're like, oh, sure. But you have to pay us money. What? Why do I have to pay you money? If you guys are so rich, you wouldn't charge me money. So anyways, you might want to think about that. Maybe you want to put some time and money into sharpening your saw and getting big here. And then when trading conditions improve, you'll have the skills and knowledge and probably an additional confidence to get you to the next level, the level you want to get. And here's the funny thing. You can't even imagine right now where you'll be in 10 years. I got big plans. Trading profitably is not the hard part. It's going to get much more interesting. Your life is going to get very interesting and offer you challenges that you can't even fathom at the moment. And you think I'm joking now? Just wait. If you're one of the few that survive, you wait. You'll just be blown away at how much your life will change and how complicated your life will get. The people around you are going to change. It's going to be challenging. Your success is going to be your biggest challenge. Right now, your strife, your struggle, your drive for success right now is the biggest challenge. But trust me, that is easy compared to what's going to happen when you are a success. It's way more difficult to be successful. It's so much easier. You know, the whole ignorance is bliss thing? It's totally true. Ignorance is bliss. You can just, on the weekends, hang out with your buddy and drink beer and eat hamburgers. And you're like, hey, man, are you thinking about the world? No, not really. What are you going to do next week? I don't really know. It's the same as what I did last week. It's so easy. You get home from work, turn on the boob tube, have a couple of beers. It's all great. Like, how easy is that? Super easy. But if you're like striving to change the world, oh my God, you wait. Right? You wait. It's going to be very interesting. If you're that type of person that wants to change the world, wait till you start changing the world. Life gets very complicated at that point, but that's how you want to go down. When you're old, laid in the hospital, that's what you want. You're like, oh my God, I can't believe the impact I was able to have and the meaning I created for myself. That's so really, right? So, cool. That's all. So that has been 1 hour and 30 minutes of my life. I appreciate you. I appreciate the struggle you are putting and the drive that you are showing for this success. Let's speed this process up. I want you to be successful sooner than later so that we can do bigger and better, more fun things down the road. And I'm ready when you are. I got the paperwork done. We're just waiting. Okay? So we got some new things coming up very soon as well that will just, I don't know. It's so up another level. I can't even tell you about it. So, yeah. So, peace on earth. May the pips be with you. May your profits be above average. And I hope you have a wonderful day. And I will see you again tomorrow. Tomorrow is what? Wednesday? So what is that? ADP? I don't even know what day it is. Oh, it must be Tuesday, right? Yeah, so yeah, tomorrow ADP and all that kind of stuff. Woohoo! Okay? Cool. So let me do this properly. Peace on earth. May the pips be with you. May your profits be above average. Shoot for the stars.